Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, October 7th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will better than expected U.S. data and geopolitical consternation complicate the outlook for global liquidity? Our answers are, bonds continue to sell off with the 10-year Treasury yield rising above 4% for the first time since late July, amid incremental evidence of our resilient U.S. economy and sticky inflation themes. Recall that we called for a top in bonds at the year-to-date high in TLT last month as a function of those themes. So far, so good. Our math confirms that U.S. dollar, currency volatility, interest rates, fixed income volatility, and energy prices are all key countercyclical leading indicators of global liquidity. Each factor recently moved in a direction that is unsupportive of our here comes the liquidity theme. Our positioning model continues to signal reasonable risk of a correction over the short to medium term, so investors should expect a cross-asset correction this week if neither Fed speak nor the September CPI release are dovish enough. Transitioning to our 42 macro dashboard here, as always, we'll wrap up with a question from our community. This one's regarding dollar hegemony. It says, hey, Darius, hope your family is doing well. In the macro scouting report, you mentioned the path the U.S. Will possibly, the path that the U.S. is in that will possibly disrupt U.S. dollar hegemony, and acknowledge how important this situation is, and that the U.S. will go to great lengths to support current U.S. dollar hegemony. I'm interested in what you think some of the policies may or could be in the likelihood of those policies being implemented that would protect this current status. So great question. So I'll start by saying U.S. dollar hegemony is not a policy that the U.S. is in full control of. It can do things to sort of help maintain the status quo, but at the end of the day, dollar hegemony is really a function of the rest of the world, choosing to, settle trade in dollars and keep the bulk of their foreign exchange reserves in U.S. dollars, which obviously both of those numbers have been declining in recent decades. And so in terms of, the most important thing you can do to maintain currency hegemony and dominance from an economic standpoint across the world is having a very strong military, particularly strong Navy, strong Marines, and strong, having military bases around the world that, that can sort of protect global trade and give your trading partners and really anybody trading around the world confidence that the U.S. dollar, the U.S. Navy, U.S. military are going to backstop global trade flows. So that's probably step one. So that obviously means, we're going to continue to see unfettered growth in military spending as we've seen, for several decades now. And it's unlikely to just be discontinued, certainly in this fourth turning era where we're likely to see an explosion in military spending at some point. Recall that every fourth turning since the 1400s has coincided with a total war in Anglo-Saxon society. So investors should be aware of that. And then the second thing you can do to protect dollar hegemony is to continue strengthening your ties with allies. Obviously, strengthening, your ties with NATO, strengthening your ties with countries like Japan and in Asia. Obviously, trying to bring new countries into the mix like India as well. So those are the kinds of things you can do from a soft influence perspective to, ensure dollar hegemony. But at the end of the day, if large countries like China, Russia, and other, actors really just decide that this is something that it's better for them to go through the pain of undoing dollar hegemony than maintaining dollar hegemony, then that's something that they're going to do and they're well within their right to do. We have a responsibility as kind of being at the top of the global food chain to do what we must from a fiscal monetary policy perspective that makes dollar hegemony a good thing for the world as opposed to a bad thing for the world, which some of these large countries are probably thinking over the past couple of decades. So we're wrapping up there. Darius presenting our macro minute for Monday, October 7th, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back here tomorrow. Cheers.